First of all, it's a real pleasure to be here presenting on Thor Explorations. Just by way of background, we're a West Africa-focused explorer turned producer over the last few years, having just been through a very transformational period, going from an explorer, developing a mine, taking it through feasibility, and building it, and going into gold production. Last year was our first calendar year of gold production. Now we think we've set a very solid platform for growth organically, and the fact that we have positive free cash flow gives us the opportunity to look for other inorganic opportunities. And I think very importantly, a key point of our strategy is that we are a first mover in the jurisdiction that has mining in its infancy. So we are constantly evaluating other value enhancing opportunities. And that doesn't matter what mineral we look at, so long as we believe it adds significant value to our shareholders. So if you could go to the next slide, Nick. So our focus at the moment is in Nigeria and in Senegal. In Nigeria, we have our flagship Senegal gold project, which produced 98,000 ounces of gold last year. We produced just under 21,000 ounces of gold in Q1, and just over 23,000 ounces in Q2. Our guidance for this year is between 85 and 100,000 ounces. We believe we're still within our guidance. We also have a second gold project in Senegal, the Douta project, which is a project which has been growing over the last few years as we've advanced it. We're very excited by the upside potential of the Douta project, where we recently had a mineral resource estimate that's added 1 million ounces to our maiden resource. So we now sit about 1.78 million ounces there. The objective there is to get to a preliminary feasibility study by the end of this year, after which we continue advancing this project. Very recently, we announced our acquisition of a lithium exploration portfolio in Nigeria, which is over 600 square kilometers. We're very excited by this because we think it's a very compelling commercial opportunity that we investigated thoroughly. We assembled a land package over 600 square kilometers, and we're very rapidly advancing exploration here. In fact, we just had our first lithium press release on our drill holes earlier this week, which we were very excited about, and I will come into more detail on that in this presentation. Next slide. So we're listed both on the AIM market of the London Stock Exchange and also on the venture market of the Toronto Stock Exchange. We have a market cap of just under 230 million Canadian. We do believe there is a lot of scope for re-rating, given the fact that we are rapidly paying down our debt, we are generating strong cash flow, and we have significant growth potential, all of which I will go through in this presentation as well. Next slide, please. So as I mentioned at the beginning, we completed our first calendar year production last year, reached 98,000 ounces, which was right at the top end of our guidance. And it completely transitioned us from an exploration company going out to raise funds to get to the next milestone. We started generating free cash. We had an EBITDA of $71 million and operating profit of $40 million. We have an extensive exploration package in Nigeria, a jurisdiction which we believe is completely underexplored in terms of the mining sector. And we're very excited about the exploration that's going on there. We believe for the first time in our history, we've had the ability to throw larger amounts of cash at exploration, and that's beginning to yield results. We have this year a lower guidance just due to where we are in the ore body, between 80 and 95,000 ounces. We're still well within that. And our all-in sustaining cost guidance is between $1,150 and $1,250 per ounce. We believe we're still well within that as well. Next slide, please. So Nigeria, we're in Nigeria. We've built the first gold mine there, but a lot of the hurdles we received whilst trying to put the funding together for this project was the fact that, from a mining perspective, the jurisdiction was still in infancy. So we like to highlight the fact that, it is the major economy in Africa, should I say, with a stable political environment. We've just had a presidential election that's concluded, new ministers in place. There have been no issues and no impact on private sector business. Yes, it hasn't got an established mining sector, or should I say an advanced mining sector, but it has got an established industrial base. Even maybe not metals mining, but for example, the cement industry in Nigeria is the largest in Africa. So there are a lot of support services available. It's got a young, growing population, a very educated population as well, with a good access to labor. And I think the last 2 points I always like to emphasize. Firstly, there's very strong support for the mining industry from the government, with the need to diversify away from oil and gas. So the Mining Act in Nigeria is actually very enabling. It's the incentives in place are very, very competitive compared to where else you get in Africa. To name a few, there's a 5-year corporate tax holiday. There's 100% ownership of your project. There's free repatriations of your dividend. There's various customs exemptions for bringing in mining equipment. And there's free movement of your foreign exchange as well. And the last point, which I mentioned, is the immense geological potential the country has. You think of the size of the country, the age of the rocks, where it is geographically, and the fact that we are the only large-scale gold miner is really a function of the lack of gold exploration and minerals exploration that's happened in the country. Next slide, please. From a geological perspective, when we look at the whole western axis of Nigeria, it's underlain by remobilized Birimian, with a significant number of gold, artisanal mines and small-scale mines, as mapped by the Geological Survey. We've gone out and pegged any ground that looks interesting through either licenses we own 100% or through joint ventures with various local entities that do have exploration licenses, knowing that we have the financial and technical expertise to move these forward. So we have gold occurrences on all our licenses. I mentioned at the beginning of the call, this is the first time having built a mine and now in cash flow, having the opportunity to throw some real money at this to advance the exploration. And we're very excited about the results we're beginning to see. Next slide, please. Talking about the results we're beginning to see, earlier this year, we drilled the first significant, should I say, discoveries outside the mine footprint. It's a narrow veined, high grade, very high grade discovery holes that were drilled here, 2 meters of 227 grams per ton, which included a meter of 310 grams per ton. We had 3 meters at 14 grams per ton, 4 meters just over half a gram, 2 meters at 6.24 grams per ton. What really excites us by this is that these are targets that are all within trucking distance of the mine, the plants we've already invested so heavily in. These are still have similar structures, similar parallel structures, similar structures along strike that we are continuing to drill. And we're looking at aggregating a number of these discoveries into a critical mass that can feed the plant. Right now, we believe any extension to the mine life is hugely value accretive to our shareholders, and we believe we're on track to do that. We have 3 drill rigs drilling 3 different prospects at the moment. We will be updating the market in the coming weeks and months and throughout to the end of the year on our drill results here, and with the view of announcing and the hope of announcing a mine life extension as we continue to drill. So what we are seeing is a lot of ground that is underexplored, that's never been drilled before, that hasn't had historic data, but we are beginning to work up drill targets, which we will detail in our next quarterly and management discussion and analysis, which will be out this month. And we continue to drill these. Next slide. We don't believe the upside only comes from satellite targets. This is our long section, which has always illustrated the fact that the Senegal deposit remains open at depth. All our deepest drill holes continue to intersect the ore body. We have 4 meters at 18.7 grams a ton, 4.5 meters at 15.6 grams a ton. We have 10-gram intersections, 8.5-gram intersections. However, all the project economics, all our feasibility studies have been done on the open pit, which when looking at this long section, everything above that black line. So we have drilled a significant amount of gold outside, the open pit. Part of the process is going to be converting some of these resources to reserves. Part of the process is going to be chasing some of these high-grade shoots down at depth. We looked at kicking off a deeper drilling program. However, we do think that easier, faster ounces will be in the satellite open pits. So we have deferred our deep drilling program to Q1 next year. What we can point out is that, since doing the feasibility study in February 2019 to now, there has been a significant increase in the gold price, which has meant the bottom of the open pit can go a bit deeper into some of this high-grade material. So we do believe there's already natural mine life extension that are here. There are already some wins that we can take from here. Considering to put the project together, we took $54 million senior debt facility from the Africa Finance Corporation. We've already paid back around about half of that. Around about this time next year, the senior debt facility will be gone. And then we're in strong free cash flow, producing around about 100,000 ounces per year at an all-in sustaining cost, around about $1,100 per annum. Next slide, please. Looking at our operating and financial highlights, you can move to the next slide. Last year, we further to going into commercial production, we produced steadily increasing quarter upon quarter, 23,000 ounces in Q2 up to 26,000 ounces, settling just above 26,000 ounces. However, we all knew we were going into a narrow, low-grade area of the mine in the first half of this year. We've managed to come through that relatively unscathed. We produced 20,600 ounces in Q1, 23,000 ounces in Q2, and we expect not to be up at that 98,000 ounce mark this year. But once we're through this low-grade, narrow area, we are into the high grade for 8 or 9 quarters in a row, and we aim to be and expect to be producing around about 100,000 ounces a year for the subsequent 3 years. What that has meant was, the EBITDA last year was $71 million. That's an average gold price of just under $1,800 per ounce. So we can see there's a lot of value here to be delivered to shareholders, and hence my point in the beginning. We do believe there is significant scope for a re-rating on the gold alone. We have based all our financial projections on the open pit alone, which we're mining. We haven't included all our financials are based on us not finding another ounce of gold, which we believe is extremely unlikely, and we've already started doing that. And this is only based on one project. We are diversified by jurisdiction as well, with the second project in Senegal. Next slide, please. And that takes me onto our Senegal project. This is a much more known part of West Africa in terms of gold discoveries. We are that yellow rectangle there down at the Senegal-Mali border. We're sandwiched between Massawa, which is owned by Endeavour, and Makabingui. This is a very, very prospective bit of ground with significant gold mineralization. Can you go on to the next slide, please? What initially attracted us to this license was there was just a soil anomaly here in the south, but it was 5 kilometers away in a similar orientation and geometry to Massawa, as you can see in the bottom left of the picture. We've drilled this project through the years, advancing it slowly. However, there has been a significant amount of upside that's been created here. We now have a resource that has a strike length of 7 kilometers, that only goes down to about 65 meters on average. And like our project in Nigeria, this has not been closed out at depth. One of the very attractive things about this project is the fact that the entire strike length of this license has gold anomalies, even areas where we haven't drilled. We have a number of prospects we still haven't drilled. We recently had a discovery in 2022 called the Sambara in the north, which is a completely different style of mineralization. We're in the middle of a drill program now, 15,000 meters, which should be ending in the next 3 weeks. We'll be updating the market with our drill results, and this is all going to culminate in a preliminary feasibility study. Next slide, please. What we can say about this project is, there are some areas of very high grade. You can look at, one of the most attractive things is the project is still very wide. There's a huge amount in the oxide as well. If you look at some of our intersections right from surface, 40 meters at 1.95 grams per ton, 26 meters at 4.6 grams per ton, 32 meters wide, 1.45 grams per ton, 16 meters wide at 2.2 grams per ton. And I emphasize this has not been closed at depth either. So when we complete our 15,000 meter drill program in the next couple of weeks, over the course of the next few months, we'll be updating the market with our drill results as they come in. But at the end of the year, we'll have a preliminary feasibility study. This is the first time investors and shareholders are going to be able to attach some commercials to this project and some economics to this project. I don't believe this is priced into our share price at all. I think we're labeled as a single mine producer in Nigeria, whereas the ability for this project to deliver value to shareholders is significant. So if I was to take this project out and put it in its own company, I think it would have a market cap that traded materially to what we're trading at as well. So personally, and from a company's perspective, once we have these project economics out at the end of the year, I think people are going to recognize what value this project can deliver to Thor and its shareholders. Next slide. Earlier this year, we mentioned we had assembled a portfolio of lithium exploration ground in Nigeria. And the reason we did this was because we are a first mover in Nigeria, where we are at the forefront of a new frontier jurisdiction in terms of mining, a government that's very eager to diversify away from oil and gas. We recognize the global supply-demand gap between in the lithium sector. And knowing historically the geology of Nigeria, Nigeria used to be, prior to the discovery of oil, the global largest exporter of tin. And there are a huge number of pegmatites here that are mineralized, that are underexplored and haven't been drilled. We saw this opportunity as an opportunity that was way too good to miss and to overlook. And we put some effort into doing some reconnaissance. If you go into the next slide, I can start talking about this. So what we did was we formed a wholly owned subsidiary, New Star Minerals, and we went about doing some reconnaissance, taking grab samples, soil geochemistry, and some of the results back we were extremely impressed by. If you could go to the next slide. We were extremely impressed by some of the assay results that came back. And the fact that we're generating free cash from our gold business has meant we're able to advance our lithium opportunities with no shareholder dilution due to funding from our gold cash flow. We have a shared vision with the Nigerian government. We've been in Nigeria working now for 7 years. We have very good relationships with the government and a good network. We have a first mover advantage in the country, so we have the ability to fast track exploration. We have over 40 geologists. We have earth moving equipment, access to drill rigs, excellent data set, excellent equipment in terms of aeromag data as well. So we're able to, and also we have a very strong brand in the country. So we're able to acquire key exploration tenure, advance it at our own costs, and advance it quickly. Right now, our focus is on spodumene and lepidolite. If you go to the next slide. So I wouldn't spend too much time on this slide because I think it's clear that even up to 2040, the global demand supply gap in lithium is projected to increase, and there will be a requirement for more mines to come on stream. And this is what has really driven this compelling opportunity for us. Next slide. Whilst lithium mines are emerging all over the world, despite the brilliant geology in West Africa, there haven't been any mines that have emerged yet. So we do think there's untapped lithium potential in this area and in Nigeria specifically for the reasons I mentioned earlier. Next slide. So our plan, we're kicking off with exploration. Our initial reconnaissance came back with So very compelling assay results ranging from 1.3% right up to just over 9% Li2O. This was confirmed by sending to various independent labs. First thing we have kicked off is an initial 5,000 meters on existing exposed lithium-bearing pegmatites, whilst we map the other pegmatites and take soil samples from the others and carry out auger drilling on the others. Our target maiden resources within 12 months, and we want to be able to demonstrate this project viability. Like I mentioned earlier, we have the ability to fund this internally. We've just built a mine in Nigeria. We believe we can deliver another mine and build it and operate it. We are targeting our first production in 2025. So it's an aggressive timeline, but we do believe this is very achievable given what we've seen on the ground. Next slide, please. So on this slide, you can see our lithium licenses in green, our gold licenses in red. You can see some of the initial results from our grab samples. We have assembled a land package that consists of different project areas. Initial focus is the West Oyo project area, which we call the Oyo State Lithium Project. We have contiguous licenses that stretch up to 30 kilometers, covered in pegmatites. Some have existing artisanal lithium mining, and these have been verified by the outstanding assay results we got back. Next slide. I mentioned earlier this week, this is the Oyo State project. If you look at on the image on the left-hand side first, we started drilling not on the large pegmatites, but on the smallest pegmatites that had known artisanal activity on it. If you look on the right-hand side, you can see some of the drill results we press release, which is zooming in on the image on the left-hand side. You can see some of the initial drill results we had, and we were extremely happy with this. Going from 9 meters at 2.42%, 11 meters at 2.6%. We had 3 meters at 1.6%. We had 11 meters at 1.5, which included 9 meters at 1.7. This was an excellent start, given this was our first set of holes into pegmatites. This is probably the first known drilling of lithium in Nigeria, and to come out with successful high-grade intersections as a first pass, we couldn't wish for anything more encouraging. As you can see from the images, both on the left and right-hand side, they're much larger pegmatites that already have lithium signatures that are to be drilled, and we've already kicked off drilling on our next pegmatite, and we continue drilling on this existing one while we continue to chase it at depth. So we think this is an excellent opportunity. We're very excited by it. This doesn't take away from our gold business. So company, our priority is still to extend the mine life of the Senegal gold project. That's where our cash flow comes from. That's where we've sunk in capital. We do see a significant amount of upside and optionality that can be delivered to shareholders through the advancing of these various high-grade lithium projects on a global perspective. Next slide. When looking at some of these pegmatites, the initial attraction was, just the high-grade evident lithium spodumene crystals, which were 2 meters wide, lepidolite crystals to 6 meters wide. These were all mineralized. These were all had artisanal mining activity on them, being exported to various parts of the world. Now we've managed to peg this ground and actually drill deeper at a much larger scale. We think there's significant upside potential here, blue sky exploration potential here. Next slide. These are just some of the examples of what we're seeing on the ground and what we're drilling at the moment. Next slide. So in summary, we have a parent company listed in London and the TSXV. We have that's generating strong cash flow. We have an established operating experience in Nigeria. We are developing Nigeria's first modern mining company. The lithium potential is a new value-adding business alongside our gold operations, and we're fully committed to developing both our gold and lithium businesses in parallel. And I think this gives huge optionality to our shareholders, huge upside potential to our shareholders, and the potential to transform the company once again after being transformed from going from an a gold explorer to a gold producer, really having the ability to develop another gold mine and also going into having the opportunity to develop a lithium project. We believe, the next 12 to 24 months can be extremely interesting from a company point of view and extremely value adding from a shareholder point of view. Next slide. ESG and sustainability is also one of our top priorities. It's very topical these days. We're in a jurisdiction that doesn't have a history of mining. It does have legacy issues in the oil and gas sector. So we have had to make sure we prioritize this, and we've tried to adhere to global best practice in everything we do, from corporate governance to health and safety to social and community. We're listed on 2 exchanges with all our corporate policies on our website. We keep global best practice standards for health and safety. We believe having the social license to operate in Nigeria is of utmost importance, and our community development agreements do show this as well. We have a lot of detail on our website. I won't go into all that detail now, but I'm happy to answer any follow-up questions on that. Next slide. Our board and management cover capital markets, exploration, in-country expertise, mine construction, and we've been together over the last 6.5 years. Next slide. There's a little appendix on our management team as well, and we're happy to answer any questions. More details this on our presentation. And I think that's everything from me. I'm happy to answer any questions. Thank you very much.